Hi, everybody, and welcome to the Executive Buying Weekly Market Wrap for December 29th, 2017, the last trading day of the year. And what's pretty interesting is that we had a pretty big sell-off towards the end of the day. Market went down about 0.7% or so. And I guess we just had a lot of people wanting to take some profits or even take some losses for the tax loss purposes. So we'll see how we open up next Tuesday, which would be the next trading day, and for 2018, the first one then. And for now, what I wanted to do was just kind of go over for some of the people who are new to the newsletter, just how and why we pick stocks based upon what insiders are doing. So the first thing that I'm looking for when we see an insider buy shares is we want to make sure that they're buying with their own money. So what happens with insiders is when they buy shares of their own company and they are a director, a 10% owner, uh, president, vice president, CEO, chairman, anything higher up, they have to file what's called a Form 4 filing with the Securities Exchange Commission. That filing has to be done and made public within 2 business days, and that's when we see it hit the screens. So we're not too far behind the insiders. The other thing that's great about following the Form 4 filings versus the 13D filings, which probably get more of the news, the Warren Buffetts of the world and what they're doing, is that the Form 4 filings, when insiders buy shares of their own company to minimize getting everybody rushing in and buying behind them and then selling it to those same people, insiders have to hold on to their own company for a minimum of 6 months if they want to have any other profits. They're allowed to sell, but if they did make any profits, they'd have to actually give them up. So it's obvious that when insider buys, they're going to hold for longer than 6 months. So in this particular instance, we have a company called Rieta Pharmaceutical, and the insider, the 10% owner, James Treweek, has been purchasing shares, and from December 15th, he bought 2 million dollars worth, then 3 million, and then a whole bunch of quarter and $500,000 positions that he bought. Now that was from 24.65 all the way up till today. He purchased shares at $28.47. So if you take a look and just click on their Form 4 filing, just the most recent one, let me just fit the screen here, sorry. What you'll see, and I'm trying to make this correct, there we go. So what you'll see here is the name, the company, his address, the date he bought shares, and then you'll also see if it's tied to any type of options. Okay, so in this particular case, it's not. And what's interesting is that as time goes on, he's continuing to buy more shares, even though the stock price is going higher. So if we go back and take a look at the chart of this company, he last December, he actually purchased stock right around 20 bucks a share. And then during the middle of this year, it shot up over $40. So he almost made 100% on his money. Now, he didn't sell, but we could have. And it dipped back down again. And all of a sudden, what do you know? He's buying again. So it's really interesting to see what's going on with these insiders, especially when you get to look at what they're doing with their own money, knowing that they have to hold on to these things for a minimum of 6 months. So that's why we get really successful with the amount of win ratios that we have, or with our win ratio, I should say. We're shooting right now at 68% win ratios versus all the companies that we put on there. And I just think it's an extremely interesting situation because if you could be right 68% of the time, the next thing to tackle would be how big are your winners versus your losers. So we always try and put a target on at least 2 to 1 of the amount of gains that we're looking to get versus the amount of losses that we're willing to risk. So put all those factors together, you have a winning strategy. You're following people who are smarter than me, you, and just about anybody else in the market regarding their own company. And then you do put a nice risk management piece together, and I think you have a winning system. So that's why I just wanted to go over this with you and just kind of let you know kind of what I'm looking at, how I'm looking at it, what are the main issues that we see here. So this is obviously a biotech company, so it could be really volatile. The thing could drop 50% in any day. So I'll definitely appreciate the time, and I hope you guys have a happy new year. and we'll definitely talk next year and next Friday. We'll keep it coming, and I hope 2018 is going to be really great, just as good, if not better, 2017. So enjoy, have a great weekend, and for everybody except for the ones in Florida, hope you guys stay warm. All right, thanks.